Hey everyone, and welcome to Realbricks. You're moments away from beginning your fractional real estate investment journey, and there are a couple of things you need to know before getting started. First, we're going to cover why real estate investment has historically been considered a strong, long-term performing asset. Then I'm going to break down the fractional real estate investment model and how it's bringing automation and access to the real estate industry. We'll then cover the Realbricks investment platform and how it works, and the potential benefits of investing and why this type of investment opportunity has gained attention over the past decade. And of course, I'll show you the economic factors our team evaluates for each property to consider the potential appreciation and cash flow for each investment. We'll wrap it up by showing you how to get started and expectations for the investment process. By the end of this video, you'll know what to expect when you start your real estate investment journey. Okay, let's get started. First, you may be asking, why invest in real estate? Over the past several decades, real estate has been a key component of many investors' long-term portfolios. In fact, real estate continues to be a core component of many high net worth portfolios, with investors often allocating a meaningful portion of their assets to it as part of a diversified strategy. Real estate is unique due to the potential for two different types of returns on investment. The first is rental income. When a property is purchased and rented out, it allows for the investors in that property to receive cash flow from the rental income. The second potential source of return is property appreciation. As the value of property changes over time, the value of an investment tied to that property may also change. Let's take a look at this chart showing the average home value in the U.S. over the last 50 years. Home values across the U.S. have increased in the past decade and are anticipated to continue to rise, though they remain subject to fluctuations based on economic and local market factors. While home values have increased significantly over certain periods, they have also experienced fluctuations, making real estate an asset class often considered for long-term investment strategies. Real estate provides diversification for an investment portfolio, in addition to other investments like stocks, ETFs, and crypto. A balanced portfolio helps to mitigate risks when markets fluctuate. So why invest in real estate? Because it provides the opportunity for passive income, long-term wealth building potential for appreciation of the underlying property, and diversification. Real estate investing can play a valuable role in a diversified strategy aimed at building long-term wealth. Now, a lot of you probably already knew this and have wanted to get into the real estate market, but lacked the upfront capital required to purchase your own investment property. This is where Realbricks and the fractional real estate investment model provides an alternative option for investors to access real estate investments. The old way to invest in real estate is complicated, time-consuming, expensive, and outdated. Let's look at the process. You start by researching properties and hope you find a decent deal. Then you have to find a lender, tour the homes, make an offer, hope the offer gets accepted, pay the down payment and closing costs, get approved for a mortgage, secure your insurance, and then you finally get the keys to your investment property. But then it's on to the renovations, the repairs, listing the home, showing the home, vetting the renters, signing the lease, and dealing with all of the property management, accounting, and taxes. Guys, there has to be another way. A new way forward that thousands of investors are turning to is fractional real estate investing with platforms like Realbricks. Realbricks utilizes fractional real estate to allow investors to own shares in a specific property without having to buy the entire property themselves. Each investor essentially purchases a fraction or a share of the property, which gives them ownership interest in a proportionate share of any rental income or long-term appreciation. This type of investing lowers the barrier to entry, making it far more affordable to invest in real estate because investors can now invest in much smaller amounts. Now, how does Realbricks find and vet properties? We follow an established market and property vetting process to assess and select investment opportunities based on defined criteria. We evaluate each investment based on 6 key factors designed to assess potential returns and the long-term stability. Market demographics. We look for markets with a growing population, low eviction rates, and low unemployment rates to indicate the potential for a steady stream of renters who stay in leases and can afford their rent. Rental market analysis. We look for real estate markets with high rental occupancy rates, strong average rental prices, and low vacancy rates to mitigate against the risk of properties that sit idle without cash flow. property analysis. We look at location, neighborhood demographics, proximity to schools and city centers, projected rental income yields, and potential renovation costs. Housing market performance. How has this market reacted to changes over the last 10 to 20 years? We identify markets with stable property value growth that have both weathered downturns and capitalized on upturns. Economic health. We look for markets with a growing local economy and a stable workforce to gauge long-term stability and fuel housing market growth. Property rights. We select investment properties in markets with laws that protect the rights of property owners, such as landlord laws and eviction rights, that allow us to take action on delinquent tenants as needed. We use this criteria for every market and property we list on our platform to give our users the opportunity to invest in vetted properties with economic indicators to increase the potential for dividends from rental income and long-term asset appreciation, depending on market conditions. Now let's talk about the types of returns our diligence team targets when underwriting properties to list on the Realbricks platform. Our team selects properties that have targeted rental incomes that would support quarterly distributions to investors in the range of 4 to 6% annual dividend yield, though returns will vary by property and are not guaranteed. To illustrate how this could work, if a property were generating a 6% yield and you had invested $10,000, that would represent approximately $600 in annual rental income, or roughly $150 per quarterly dividend. You can either cash out your dividends into your bank account or reinvest them back into a property of your choice. The other way your investment grows over time is through property appreciation. If the properties in your portfolio increase in value, so would the underlying value of your investment. It's important to understand that while a property's value may increase over time, any appreciation is not realized until the asset is sold. In periods of market decline, property values may decrease, and some investors choose to hold through these cycles, depending on their long-term strategy and market conditions. Real estate has historically been an asset class that has appreciated over the long term, and through our property selection process, we focus on markets we believe have favorable growth characteristics. So let's recap the key considerations for real estate investments and how Realbricks provides access to these opportunities. Low minimum investment starting at $100. Our mission is to make fractional real estate accessible to everyone. So whether you have $100 or $100,000, we give you the flexibility to invest according to your budget. Passive income and appreciation. The potential for quarterly distributions from rental income, along with exposure to changes in property value over time. Simplicity and ease. Realbricks has reduced the complexity and barriers of real estate investing. You don't have to worry about any of those 17 steps to purchase a property directly. We handle it all and provide a smooth and automated investing experience. A structured approach to investing. Realbricks utilizes a structured due diligence process to evaluate each property offered on our marketplace. Our 6-step criteria are designed to assess key investment considerations, including potential returns and long-term market conditions. Industry-leading mobile app. Our app makes it easy for investors to manage their portfolio anytime, anywhere. It's simple to use and provides all the functionality of the desktop platform in a convenient mobile-friendly format. If you haven't already, download our app from the App Store or Google Play Store and see just how easy it is to manage your portfolio right from your phone. If you're interested in exploring real estate investing, Realbricks provides access to opportunities that may offer rental income and exposure to potential long-term appreciation. Creating an account takes just a few minutes, allowing you to begin reviewing available investments. Since day one, our mission has been to expand access to real estate investing. We've built our platform to simplify the process and provide a more accessible way to participate without the complexities of managing properties directly. You can get started at any time, one brick at a time.